But thanks you all to have joined. Initially, this was scheduled to be a new subcontractor training. So a lot of we're going to be going over a lot of basic things that a lot of the old subcontractors who are here on the webinar already are familiar with. We do, I believe, have one new subcontractor here on the line now. So if there are any questions at all, no matter how basic you think they are, feel free to ask. There are no dumb questions. I know that's cliche, but it is true here. So we'll get started right away talking about the first item on the agenda here, which is the Memorandum of Understanding. So as most of you know, the Memorandum of Understanding goes out to every agency that's participating in the contract. We send out 2 copies, both with Sigler, the executive director's signature on them, so that you can sign one copy, keep it for yourself, sign the other copy, and mail it back to us so we both have originals on file. The MOU shouldn't change much from last year. There's one thing that we're adding in this year, though, that is probably unfamiliar to folks, although we did collect this recently back for the 2014 contract year. It's a confidentiality agreement for folks who are dealing with confidential CalFresh outreach client information in the field. So it's going to come to you with your MOU. It's kind of an involved process getting it signed, because basically anyone who is participating in that way, where they're out in the field, they're dealing with sensitive client data, needs to certify through this form that they are aware of the different procedures for handling such data, the different penalties involved with disclosing data to the incorrect parties, etc. And we'll send this to you with your MOU. It's about 8 pages. It details what this state expects as far as confidential information handling is concerned. And each employee, as I said, that's handling this data will need to initial and sign it and return it to our offices. For some of you, that may be 1 or 2 employees. For others, it may be 15, 20 employees. But again, each employee that may come in contact with that type of data will need to sign and return that. You'll see it. It'll come in your MOU packet. But I just wanted to make sure that everybody has a heads up and expects to see that, because it will be something new this year with your MOU. As far as we know, that's the only new thing coming with the MOU. This is DSS's first year dealing with the contract startup. So in the past, it was always the California Department of Public Health, who we were with when the contract first began. And now, since DSS has it, they've tried to imitate much of what the Department of Public Health was doing, although they've cut a lot of the fat, which is nice. But we're not quite sure, and I don't know that they're quite certain exactly what forms are going to have to go with our MOUs. We've prepared an MOU packet that we think is sufficient. We don't see any trouble with it, but since it is DSS's first time through this, we don't really know for sure if they're going to spring something on us at the last minute that will need to be included with the MOU packet. All right, so does anybody have any questions about the MOU? Okay, simple enough. And you have to excuse me too, as I mentioned before, I'm kind of a novice with this webinar software. So I'm trying to make sure that I'm seeing if people are triggering the question buttons or raising their hand and that type of thing. But if I miss you, feel free just to call it out. Okay, so next on the list is the approved budgets and the budget adjustment process. So this is something that we all just went through not too long ago when we were putting together the budgets to submit with the application. to DSS. And also, it's something that's included in the packets. I'm sorry, not the packet, but the Excel file that I emailed to everybody about 45 minutes ago. Hopefully you got that. If not, it should be on your screen now. You should be seeing it. And I'll be going through the different aspects of it here on the screen. Okay, so this top form here is the budget detail, and you'll probably remember filling this out. You went through and basically planned the spending for your program for the federal fiscal year 2015, federal fiscal year 2016. So from October 1st, 2014, all the way out to September 30th, 2016, so a 2-year period. We'll just focus on 1 year here because that's the easiest way to do this now. But this is the format. So you filled out your employee names, you filled out the positions, you filled out the annual salaries, and the percent of time that you plan to have each of those employees spending on their CalFresh outreach work. Now, the form itself was able to make calculations that would then complete the total dollar amount here in the case of the contract analyst making $40,000 a year and actually spending 100% of their time on CalFresh outreach. It just moved the $40,000 over here. Same with the director of programs. They're making $60,000 a year, but they're half-time, so it moved the $30,000 for that employee over here to the total dollar column. A lot of this had the formulas built into it. They tried to make it as easy as possible when DSS put this together. Okay, so once everyone determined who was going to be working on the program, they determined a fringe benefits rate for those people overall that would apply to everyone. So not an individual rate for each of the particular employees, but more of an estimate about what they thought their overall fringe benefits cost was going to be as a percentage of the total salary. So in this case, that's 19%. That translates to $13,020, 19% of $70,000. Okay. So the next section is operating expenses. Now, the operating expenses are generally the things that an agency needs to pay for in order to keep the agency functioning, and things like rent, things like phone costs, internet costs, the examples I have here, the things that just the agency needs to pay in order to run. The way that you're able to then charge a portion of those costs to your CalFresh outreach contract is through proration. And the prorating percentage is calculated here as a ratio of the percent FTE in the top section here, total FTE for all staff listed, divided by the organization's total FTE. So there are 1.5 people working on CalFresh outreach here in this personnel section. There are 12 overall people at the organization at the food bank in Northern California in the example. That leads to a 12.5 prorating percentage. So we have that here. All of the costs in the prorated cost section, office rent, phone, internet, insurance, all of those costs are entered as an annual amount here, then prorated by the percent FTE, the budgeted percent FTE here, to give us the total dollar amount. So 12.5% of 48,000 is 6,000. Postage costs here in the fixed cost section, now those didn't need to be prorated, budget example here, because those are of direct benefit to the CalFresh outreach program, meaning that the postage is just for items that you're mailing for the program. It's not general mailings for the agency or anything like that. It's just related to your CalFresh outreach work. So there was no need to prorate that. You know that's going to be about $50 a month, $600 annually. Okay, so that's we're just going through the budget part here. We're going to get into how to actually charge these expenses later. charge these expenses to the contract, but are there any questions about operating expenses right now? All right. The next section here is equipment. Now, equipment is not allowed to be purchased by subcontractors. So there are no costs. No one within this contract has any costs there on that line, so I won't get into that. They leave the line in, though, because it is part of their overall budget template. So we'll skip down to travel and per diem here. So travel and per diem is generally for costs associated with either getting to and from outreach sites, so where the actual work is occurring. If someone's driving there, typically they'll charge mileage, and that's an allowable reimbursable cost. Trips to county offices where you might have meetings with people regarding your outreach, trips to meet with people to potentially set up new sites, things like that that are generally related to your outreach work. So, and you usually see that in the form of mileage. That's an allowable cost here, and we have 7,200 miles for that in this budget at 56 cents a mile, which is the current federal mileage reimbursement rate, which gives us that $4,032 there. We have parking associated with that travel. Many people, if you live in a city, when you get someplace, you have to park and pay to park, so you can include that parking cost too. So we put a little bit in there for that. Now the next line is travel to network-sponsored CAFD-approved meetings. So the scope of that travel is pretty limited. The only travel that can be done and reimbursed is stuff that's been pre-approved, and generally it is to meetings that either CAFD is holding or that the Department of Social Services is holding and they've invited you to. So we typically don't see too much on that line, and typically people don't invoice much on that line unless they have something very specific that we're going to. And in this case, I made a vague description in this budget. There's no specific meeting listed, but it is a network-sponsored, and sorry, that's actually a misnomer. It shouldn't be network-sponsored. It should be CDSS-sponsored. That's a holdover from when it was the California Nutrition Network, which it no longer is. It should be removed. It's actually trip to CDSS-sponsored CAFD-approved meetings. So here we have one flight at $250, the hotel for 2 nights, 2 days per diem, and the meeting registration cost. So those are the type of things that are allowable there. All right, so any questions about travel?
Hi.
And again, I'm sorry, go ahead.
Oh, yeah, I just had a question. Is there a list, an updated list of allowable expenses somewhere?
Well, I don't think that DSS has put out an allowable list in the way that CDPH had their grid of allowable and non-allowable costs. So I'll look into that and I'll ask them if they can provide us with something like that. But last time we asked, they didn't have a really a narrowed down, easy to understand list. It's kind of, they know what can be expensed, but they just haven't written it all down. And I really, in a lot of ways, same with CDPH. If you looked at their allowable and unallowable list, it was pretty vague, and it didn't really cover everything. It just put the more, I guess, controversial things in there, or things that people were more likely to ask questions about. But there never was a really solid list of here's what's allowable and here's what's unallowable.
Okay, thank you.
Sure, and we can see it. We've asked DSS for that before, and it's really, I mean, we've narrowed it down here in the budgeting process, and a lot of what we do here with this program is to get these budgets done, and when the budgets are done and complete, that's basically your assembled set of allowable costs. So when you're doing your budget, you put all sorts of things in. Some of them make it through the process. Maybe some of them get taken out during the process. The things that got taken out were deemed unallowable by DSS or by USDA or by CAFB. And so what's left is the assembled set of your allowable costs, essentially. So really, the budget is always your guide. And that's something that we'll get into when we get into the invoicing. But whenever you're thinking to yourself, I want to do this, I don't know if I can pay for it and be reimbursed through this program, you should always look at your budget. If it's not in there, then you should always ask CAFB if it's something that you should spend the money on before you do it. All right, well, we'll move on to other costs here. So other costs are different than operating costs in that they're generally costs that are special one-time purchase type things. And you'll see that here in the fixed cost section. We have the supplies, which are needed to produce subcontractor binders for CFO subcontractors. So that's very specific. That's something that's going to be done once by the budgeting agency. They're going to buy a bunch of binders, they're going to make some copies, and they're going to send those binders out to their subcontractors. And those are budgeted at $50 each. So they'll do that once. There's no need to prorate that. Once it's done, it's done. It's a fixed expense, and they can charge it to their contract. Same with member dues. Member dues are a fixed one-time expense. The Food Bank of Northern California here is a member of CAFB. So they have CAFB member dues. They pay that as a one-time fee, annual fee to CAFB to be members. And they've had to prorate that by the percent FTE here, though, because the member dues go to a number of things at CAFB. It's not just for the CalFresh Outreach Program. There's a number of benefits they receive, so they have to prorate that by their prorating percentage at 12.5%, so they can charge $250 of their overall $2,000 annual.
You're supposed to not here, right? Yeah.
All right, so are there any questions about other costs?
Okay.
Okay, on to indirect costs. Now, indirect costs, we could give an entire webinar on indirect costs. It's pretty complicated in a lot of senses, but we've distilled it down to a set of pretty basic principles here, which the indirect costs are included in your contract in order to recover a little bit of extra funding above what you've identified in the sections above, up there in the personnel section, in the fringe benefits, in the operating cost section, because really when we're doing the budget, we try our best to figure out exactly what our costs are going to be, but chances are something or some things were left out. They just couldn't be identified. They're too small, or they're too convoluted, or they're spread across all the programs and too difficult to identify. So the indirect cost rate that you're able to include in your contract is to cover those things that you otherwise couldn't identify as direct costs. So how that's calculated, we passed out a form with the request for the for your application, which was the indirect cost certification form. So you went through, you should have gone through and looked at your most currently audited financial statements, looked at your statement of functional expenses, done the calculation that was prescribed within the indirect cost form, and come up with a percentage. And that's in the simplest terms. Here in my example, the Food Bank of Northern California did that. They came up with 10%. So they are charging 10% of all of these lines here, personnel, fringe, operating, travel, and other costs. They're applying that 10% to the sum of those amounts. That's an extra $9,700 that they get to cover the unidentified expenses within the budget. Okay, so we've gone all the way down through the budget here, and we get a total of $106,847, which is the amount that it's going to cost, we've projected, to run the entire CalFresh Outreach program for a year, for 12 months. Are there any questions about the budget here? All right. Once this is completed, what happens is this form that you were sent with your application translates this amount into your budgeted amounts here. It splits the amount, the $106,847 in total cost that you'll have for the year, into the state share amount and the federal share amount. The state share amount, as it states, is not reimbursable. So that's the amount of the cost of running your program that your agency is going to have to pay for over the course of the year. And that represents 69% of the overall costs present in that annual budget that we just went through. It's divided into the same lines that the budget is that the previous document is divided into, and it all just moves these amounts over from that previous page. Federal share is the amount that you will be reimbursed. So that's the value of your contract. This represents 31%, the remaining 31% of those costs from the overall annual sheet. So in the case of the Food Bank of Northern California, their MOU will arrive stating that they are eligible for $33,123 in reimbursement for this program. And that's based on their spending the overall $106,847. So at the end of the year, if they've spent that full $106,000, they'll get $33,123 of that back. Okay, any questions about the split? All right. Okay, so now on to the next agenda item, which is quarterly time tracking. So we have currently three methods of tracking time. One is the 100% FTE certification sheet here. So this 100% FTE certification sheet allows an employee who is spending all of their time on CalFresh outreach work to sign this form and exempt themselves from having to fill out the time tracking, the hourly time tracking documents that we'll go through next. So if there is an employee that's in your budget that's at 100% of their time, you know they're going to spend 100% of the time on CalFresh outreach, that's all that they do, they can sign this certification, submit it to us in lieu of the time studies, so or the time sheets. They have to do that twice a year, so every 6 months. Anyone who has a 100% budget, their budget, out your time track will 100% at a time. And like for 6 months, get blank form at that point. Okay, so if you're 100% of your time outreach work, then what you will complete is a time study. And this year, for those of you, which is most of you, who are returning subcontractors, we have a new format. There's a new form here that DS, I think they've done a really good job. They really, there's about 4 different type of thing. I'm rid of this. I guess we don't care. Did you spend on CalFresh? Same. You have somebody out in the field doing enrollment work, or if you have somebody who's in the office putting together these the financial reports. So as one works on their outreach work, they'll complete this sheet. They'll add put in how many hours they did. In this case, employee X from our budget tracked their time, 8 hours on the first, 6 hours on the second, etc. And then another neat function of the new sheet that DSS has built in is a automatically calculating prorated PTO. So I think you guys remember in the past we asked you to track your paid time off, but it couldn't be included in a full day. If an employee wasn't a 100% FTE employee, you couldn't include 8 hours of CalFresh outreach work if they were out for the day. You had to say, well, usually they work 50% of their time, so we can include 4 hours of that work in PTO. So now they've built a calculation into this sheet, which is great. So if you take a day off, you would enter 8 days on the 10th year as employee X did, and in row 3, prorated PTO, it calculates it automatically for you based on the calculated FTE up here. So that's great. I think that's going to help everybody a lot. So employee X here filled out their time study. They wound up with how many hours here? 151.5 hours. So that's for the month of October 2014, which is here. So that's how much they worked in October. Now, this is a time study in this case. So the point of the time study is to take a representative sample from 1 month of the quarter. So in this case, that month is October. They completed their hours, employee X completed their hours for the month of October, and they came up with a percent FTE of 82.33%. So to the time study logic, we're saying that, well, if you worked 83% in October and you worked steadily across all 3 months of the quarter, then you would do 83% in November, 83% in December. So we're just going to take a sample. We'll say that October represents what you normally do across all 3 months of the quarter. So we'll just study 1 quarter and we'll say that's good. Then you can certify that amount of time, and that will apply to November and December. So that's what this does here for our discussion purposes. This sheet will track the hours for a month and then come up with that average. So employee X, 151.5 hours, 82.33% of their time was spent on CalFresh outreach. Employee Y did the exact same thing, tracked their time. They came up with 46 hours, or 25% of their time in the month of October was dedicated to their CalFresh outreach work. All right, so is there any questions about the time tracking portion here? No, no questions? All right. So the next part here, once everyone has tracked their time for the period that we're asking them to track their time for, at the end of the quarter, so in this case, October goes by, you track your time, November goes by, you don't track your time, December goes by, you don't track your time because we have the representative sample from October. At the end of the quarter, we send all contractors the invoicing guide, which is here. So the invoicing guide is designed to identify the cost that you can report as state share and the cost that you can report as federal share for the period. So all of the costs for that quarter associated with your CalFresh outreach work. And the way we do that is to follow a format much like the budget format, which is to list all the employees that turned in time studies for the period. So in that case, that was employee X and employee Y. We list their quarterly salary, and it's their total quarterly salary. So it's not adjusted for any, for just their CalFresh outreach portion of their salary. It's their total salary, the total net amount paid to them during the period, during the quarter. And we do that because the sheet is going to determine the actual amount of that overall net total salary, gross total salary, to charge to the contract. And my little note here says that actual salary costs for use, that's not a budgeted amount. It's the actual amount paid to that employee. Okay, then also the quarterly benefits, and that's the actual quarterly benefits for that employee, are entered in there. So it's not based on the budgeted percentage. It's based on the amount paid during that period on behalf of that employee. So we saw in the budget that we just went through and put in 19% as an overall blanket percentage to cover all of the employees that were listed in the personnel section. Here, when we're actually collecting the costs, we want the total value paid on behalf of that employee. So in this case, employee X was paid $1,558 in benefits, and that could be your medical insurance, that's your employer tax contribution, that's your workers' comp, any of those things that are traditionally considered employee benefits. And again, that's the total amount paid on behalf of that employee, not adjusted for anything, any percentage work they did on CalFresh Outreach or any other program. It's just the total amount paid. Okay, so once we have that, we go ahead and look at the time studies that were submitted by that employee. So employee X had a time study, we'll remember, that showed 151.5 hours for October. That amount is taken and entered into the total hours per time study cell. What the sheet will do then, the invoicing guide sheet, is automatically calculate the percentage, the actual percent FTE here, based on the amount of hours spent on CalFresh Outreach. So it'll divide the number, it'll divide that number by the total number of hours available for that period. In this case, that was 184 hours to get the percentage of 82.34%. Then, after that's been determined, the sheet will go ahead and multiply the values here of the actual quarterly salary cost, actual quarterly benefits cost, by that percentage to give us the billable amount. So of the $10,000 paid to employee X for the period, $8,233.70 is the amount that can actually be billed on their behalf based on this percentage, based on the number of hours worked over the period. And we can do that for with only having the hours collected for October, because again, we're saying that October is a representative sample of the quarter. If they worked 82% of their time in October, they did the same in November, same in December. So we can just have that 1 month's worth of data and then apply it to the entire quarter. We did the exact same thing for employee Y. Their actual salary costs, actual benefits, hours from their time study, 46. Make sure we got that right. 46 hours. And there we are. Calculated at 25%, and then went right across the board and calculated those amounts. So is there any question about charging salary and benefits? Okay. We have an easy crowd here today. The next part is to develop that prorating percentage. And you see how we developed the prorating percentage back in the budget, which was to see how many employees were spending time on outreach divided by the overall number of employees at the agency to come up with a prorating percentage. And that was really nice for budgeting purposes. We came up with 12.5% in the budget, but that was a snapshot of what was happening at that time whenever we were putting the budget together. There were a certain number of employees at the organization at that time. Let's see what that looks like. At the time, there were 12 employees at the organization when we put this budget together. We calculated there would be 1.5 of those people working on outreach. That's nice and tidy here in the budget, so we easily came up with that 12.5% prorating percentage. Now, in real life, when we're actually calculating these things on a quarterly basis, the percentage is going to change because there's new employees have been hired, not even new outreach employees necessarily, just new employees at the agency, which will change the calculation. Also, maybe the employees that were working on outreach didn't spend as much time as they thought they would spend on their outreach work. Maybe they spent more time than they thought they would spend on their outreach work. Both of those variables can skew the calculation for the prorating percentage. So that's happened here in this quarter. It looks like we still have 12 employees, right? We started with 12. We still have 12, so that's good. But what happened was it looks like employee X thought they were going to spend 100% of their time in the budget, but they really wound up only spending 82%. So that's lowered the prorating percentage. And it's unfortunate that the prorating percentage gets lowered in that way, but that's the way that it has to be calculated each quarter. It has to be a real-time calculation of who's spending time on the program for that period. So you can't just charge the budgeted 12%, 12.5%. This is an ongoing calculation. Who knows, maybe next quarter it might go up to 20% if something changes, or it may go down. But it's going to be calculated again and again each quarter. So are there any questions about prorating or how we calculate the percentage? No? All right. Okay, so once we've done that, we've established how much we can charge in salary and benefits for the quarter. We've established how much we can charge. We've established what our prorating percentage is going to be for the quarter. That moves us down to the other section here. And you'll see here in the personnel costs here, Section A and Section B, all of that information that was calculated here in the top section just carries down here. So it does this all automatically within the invoicing guide sheet. Same with the benefits amount there. That just carried down into this section. And so the sheet is doing a lot of the calculations here for you. So now we're down to the operating cost section. So there is a line for non-prorated operating costs, as well as a line for prorated operating costs, just like there was in the budget when we put the budget together. So during this quarter, we had a total non-prorated cost of $150. And I think if we go back to take a look at our budget, we will see that that matches with our postage costs. And they've actually called it fixed costs here in the budget document, but their fixed costs are actually just the non-prorated costs that we've entered in there. So in this case, we had postage budgeted at $50 a month for our CFO mailings. It looks like we spent exactly $50 a month on our CalFresh outreach mailings. That's great. So we enter that in there as the amount paid to send out those mailings. What we have below that is the total prorated operating expenses. So in that $8,359 there, it's the amount that you paid for rent for the 3 months. It's the amount that you paid for your phone, internet, etc. All of those things within your budget that you're able to charge and then prorate. So for the quarter, that was $8,359. Now that amount needs to be adjusted because you can't charge your whole rent. You can't charge all of your telephone costs. You can't charge all of those things to the contract. They have to be adjusted by the amount of time spent on your outreach work. And we calculated that at 8.94% up here. That's our prorating percentage. So the sheet will take your $83.59, multiply it by the 8.94%, and give us that $747 that can be charged for your operating costs, for the rent, for the telephone, etc. Now, are there any questions about that? All right, on we go. The next section here is very simple. It's the travel and per diem section. We had the travel in there for mileage. We had the travel to the CDSS CFP approved meetings. It looks like in this case, in the first quarter, the $282 was probably just for mileage to outreach sites. and that is based on the reimbursements paid to the outreach employees that were traveling to and from the sites, if they were reimbursed for their mileage, or however that worked out. Typically, that's how it's done. If an employee is traveling to and from the site, they submit a mileage log. We see how many miles they went. Your agency issues them a check for that mileage, and then that amount can go here on that line. And in this case, that was $282. So in the other costs line here, we're following our budget again. There's total non-prorated amount of $1,500, and you'll remember that was for the binders that we paid, that we were going to buy. There's one thing that happened with the binders, it looks like, which is that the cost actually went up to $55 each. So we budgeted them at $50, but the cost went up to $55. Now that's not exactly calculating, right? It should calculate to a higher amount than the $1,500 that was budgeted based on the $5 cost increase. So let's switch that here. So that would give us $1,650 actually. That's the amount that was on that line. Because the budgets cost a little bit more than, or the binders cost a little bit more than we had budgeted. So at $55 each rather than $50 each, so we wound up going a little bit over what we had budgeted for there. With the CAFB dues, we paid those in the first quarter. The $2,000 went here. They were prorated at 8.94% since that's the current prorating percentage for this period. So they were actually adjusted down below budget to $178.80. And we have those two values there. Are there any questions about how we did the other costs? Okay. So on to the next section here. We have the indirect costs, and that's just based on the 10% that we calculated using the indirect cost calculation sheet that we submitted with our application. It was 10%. That's the approved amount that we can use. So all that we need to do is add all of the values that we've calculated here in the upper section, multiply it by our 10%, and we get the $1695.97 in indirect costs that we can charge. Now that cell there in this sheet is not something that's self-calculating. It's something that has to be, the data actually has to be entered by you due to the fact that every agency has a different indirect cost rate. So we can't really pre-populate this sheet with that information right out of the gate. And it's possible that your indirect cost sheet would change if you, your indirect cost amount would change if you submitted a new certification sheet to us. And so we might miss that recalculation in there. So we just leave that blank and leave it up to you to know what your indirect cost rate in your budget, your approved indirect cost rate within your budget is, and then allow you to make that calculation yourself there. Okay, so this now represents what our costs were to run our CalFresh outreach program for the first quarter, so for October through December. We've calculated those based on the overall cost. So anything that we spent on our outreach work that was in line with the scope of work, with the activities within our scope of work of our contract, we included all those costs in here. Now the sheet will break those up into the state and federal share amounts for each line. So you'll remember from the budget, we had the state share amount from our budget, which was the non-reimbursable part, and the federal share amount from our budget, which is the reimbursable part. So the sheet does the same calculation here based on the split of 69% state share, 31% federal share. And it divides all your costs up that way. So it divides the state share costs and federal share costs of the personnel, state and federal share of the fringe benefits, so on right down the line. So it split your spending into what your portion of the spending is and what the reimbursable portion of the spending is going to be. And in the invoicing guide sheet, which will come to you each quarter as a blank sheet that you'll complete. There's this Invoicing Guide tab. There's also the State Share Document tab, which takes all of the information that we entered in the Invoicing Guide and moves that all over into this document that you will sign and submit. So the only thing that needs to be done with the State Share sheet and the Federal Share sheet, all the numbers from the Invoicing Guide sheet were moved over into here also. These need to be printed, signed, so 2 signatures are required on the State Share document. The project coordinator, which is usually the program director, the CalFresh outreach director, whoever is most in touch with the work that's being done as far as the activities within the scope of work. And then the accounting representative, which is the person who is most in touch with the costs. So whoever, excuse me, whoever either completed the form and is familiar with the costs, or someone else within the organization who can certify that these are actually the costs that you incurred. The invoice only requires the signature of the accounting representative, so just the person who knows can certify that the spending all happened and that it was in line with your CalFresh outreach work. Now, these 2 documents have to be received in signed hard copy before we can issue checks. And we say this year in and year out. It really is something that's necessary. Folks always need to remember to print out your State Share document and print out your Federal Share invoice and mail it to our office. And then further, if we have an adjustment, sometimes when we receive these files, we'll look at them. There needs to be a small adjustment made. We'll make that adjustment, work it out with the finance person or whoever put together the invoicing guide, and it'll change the figures a little bit. And maybe you already sent in the original version that you put together, but it's now incorrect. So we would have in our file the incorrect version. We really need to get the revision signed and sent to our office too. We need to have whichever version is the final reckoning of your costs. We need to have that in hand, signed original, before we can send out a check to you. All right. We're about good. Well, there's only one skip which it comes at a good point in our world and talk about. We've gone through most of the time, almost your expenses budgeted. And through take a look at what's actually spending and look at your current budget, they're in line with each other. These budgets start with the program. So that's the budgets that we start with. Now, some people spending taxes in cases expensive. And if that's the case, we get a few quarters through the industry process, we have a Federal Share invoice, a great example. Which is we call it on the other for those. So are you all still getting a note from to me that maybe we connect? Okay, great. Yeah, I heard it for so long, and I'm just experience. know that uh, or operating costs because when we're doing the process. The goal is always to stay within your, but questions about either of those two things. Okay, great. So the next item on the list is the required documentation, which we went over to some extent. We require the signed state share document. We require the signed quarterly invoice in order to pay you. We also require signed time studies and signed 100% FPE certification. So we need to have all these things on file before we can issue you a check. So it's often hard for us at CAFP to get the checks out in a timely manner if we don't have everything received, signed, and in good order. So please just, if you can, make sure that you're sending us all of the signed documents, sending the signed state share documents, sending the signed federal share invoices, most current version. Same with the time studies. If there's a change to a time study that needs to be made, we need to have the most recent one in hand before we can send out the check. So the payment timeline is typically we have to have our invoice. So what we do is we take everyone's invoice that we get, all of our agencies, all of our subcontractor agencies. We take their invoice amounts and state share amounts, roll them up into one big invoice, and send that invoice to the state. So our timeline for submitting our invoice with everyone else's amounts rolled up into it to the state is 60 days after the end of the quarter. So that would be, if the quarter ended December 31st, of course that would be February or maybe March 3rd or whatever, 60 days past December 31st. So we would get it to them by then. We usually get it to them a little earlier than that. We try to. And then the standard statement from CDPH was always that it would take them 45 to 60 days to process our payment and send it to us. We don't know if that's the same for CDPH. They seem to be a little quicker. So we have been getting those payments a little more quickly, but that's the standard line. So it is a little bit of time passes between the time where you submit the invoice to us and we get the payment out to you, or actually a lot of time passes. But we try to get that out as soon as possible. If we have, once we receive the payment from the state, if we have your signed documents in hand, we can get a check out to you within the next couple days. All right, so does anyone have any questions? We really breezed through that stuff. I know most of you have heard it before, and sorry to drag you through the rehashing, but if you have any questions, if anything new came up, I'm glad I got the opportunity to show the returning contractors the new time tracking documents. I think those are going to work out really great. But if you have any questions now, go ahead and ask. I think everybody's unmuted here. Okay. So I'm not sure if Stephanie is on the line. Stephanie, are you there? Stephanie Nicio? Do I need to unmute you?
All right, I'm here. Can you hear me? Paul?
Are you there?
Yep.
Stephanie.
So, hello?
Okay, oh, sorry, one more thing, everyone. Before Stephanie gets started, there may be a major change to the way that our invoicing is done this year. We're not quite sure that it's going to happen. We're optimistic that they'll think better of it, but it seems that DSS may ask us to invoice monthly rather than quarterly, as we do now. And we just went through the whole spiel, showing how you do a quarterly invoice. If it does switch to monthly, the process will basically be the same. The substantial change will be that you won't be able to do the time studies anymore. You'll have to do the monthly time tracking because we'll be getting this information from you every month. It also may increase the workload a bit. We're not quite sure yet, and really until we get until we're certain that the invoicing is going to transition from quarterly to monthly, we really haven't, we didn't want to throw everybody into a panic. So there is that potential. We don't know that it's going to happen yet, but we'll let you know as soon as possible if it does, and we'll also try to ease the transition in whatever way we can. We'll still we'll still send out the invoicing guides, we'll still send you all the documents, but rather than do it 4 times a year, we'll do it 12 times a year.
Paul, before I get going, Jen wanted you to repeat the timeline for getting checks.
Oh, okay. The timeline for getting checks. So we at CAFB, we have to submit our invoice to DSS 60 days after the end of the period. So if the period ends on December 31st, we have to submit that invoice by the end of February. Or since there's 28 days in February, it's probably more like March 2nd or March 3rd. But whatever 60 days beyond December 31st is, we at CAFB have to submit our aggregated invoice, which includes all of your submissions to us, to Department of Social Services. Now they say that they have 45 to 60 days to process our submission to them, our invoice to them, and get the check issued. At that point, once they issue us the check, we'll receive the check at CAFB from the state, which includes all of your amounts rolled up into one big check. And then if we have your signed documents in hand, we'll send that check to you within a couple days of our receiving it, the check from the state.
So it's about 120 days-ish from the end of the reporting period or invoicing period?
There you go. If you really want to add them all up and think about it that way, yeah.
And then also, this is being recorded, yes?
Oh, right. I'm sorry.
There was a question about whether the webinar will be presented again.
We're running the recording, and we can submit the recording to everyone. We can send it out to everyone once this is done. And really, if you do have, if you want a more, I guess, focused session, you can contact either me or Josh Hubler if he's your contract manager, and we can give you kind of a more personal session that we don't necessarily have to address everything that we just addressed. With what a particular issue that question.
Any other things? All right. The way I'm going to be talking about work and things. So if you have about the or any of the physical stuff, go ahead and we'll have some time Q&A. Any questions you have, let's go that and we'll go ahead and show my. Okay.
You need to do anything?
didn't meet? I don't think I can. Never mind.
Maybe the option one.
We should be good. Okay. On my the scope of work all filled out with, I don't know, or whenever we were doing the and so this is somewhat familiar to you. Where the numbers of options planted. They think that there will be, that these will be the 5 areas where they're asking for information. And so once I have more information on that, I will let you know. But at the moment, I apologize, I don't know. They are hoping to have a better idea by the end of the week. And so once that happens, I'll pass it along. This is a new scope of work for everybody. I know that there may be some questions about how you're supposed to get your approved application. We're working with the state, or your approved application numbers. We're working with the state to see if we can get something systematic, or if we can work on this together, because I know that there are some counties who do share the information, but there are more counties who don't. And as I get more details on that, I can let you know. We're hoping to have a conversation with them, or we have a conversation with them planned tomorrow, where I'm hoping to find out more about this approved applications business, and also, as Paul mentioned, whether we can stay at quarterly reporting and invoicing, or whether they're going to make us move to monthly. So those are my 2 big scope of work and tentative reporting requirements things. Are there questions on any of that? If you have questions, go ahead and type them in, or raise your little electronic hand and we can unmute you. Otherwise, I'll just go ahead and keep going. The other things I wanted to talk to you about were just a few things that are available, or that are coming up. One is there is a meeting. It's typically in February, where we have a meeting that we call the peer-to-peer meeting, and we piggyback on the California Food Policy Advocates CalFresh Forum and do them back-to-back. And we'll pay for your travel up to Sacramento for one person from your organization. And it's a meeting that is, the peer-to-peer meeting is for people doing outreach, and it's planned by people doing outreach. You are welcome to participate in our planning committee. We would absolutely welcome you and your ideas. We also have a couple other committees that are open to you. One is planning webinars, and just on whatever seems topical for folks. So it's a group of people who are doing outreach, saying that this is what they want to learn more about, and we go out and we find speakers who just talk to us about whatever their topic is. The other opportunity that we have is mentorship. You can either be mentored or get mentored on CalFresh Outreach, and we're working to make this aspect a little bit stronger. But if you are interested in, again, either being a mentor or getting a mentor, or you want to help us plan webinars, or you want to help us plan our annual meeting, that would be amazing. And if you would just please email me, I would love it. Or if you don't want to help plan and you have ideas, that is just as good. So, and to clarify, that's ideas for things that you would like to either have included in the meeting or for the webinar. You know, we would love that. Regarding webinars, we've been doing them about once quarterly or as needed. And like I said, we would really love your participation. And that is really, I think, most of what I had planned to talk with you about. Do you have any questions? Or would you like to add anything? Because I know that there are people who have participated in all of those things who are on the webinar. All right. That sounds like a resounding no. And I'm not seeing, Paul, any other questions on fiscal stuff. So should we just do a quick
I think I finally figured out how to work the question portion here, and I don't see any questions regarding that portion.
Okay. So
all right, everyone.
Hang on. There was a question in the little questions box about who to contact if you have questions on the invoicing stuff, and I went ahead and put Paul's phone number in there. You can contact Paul or me on anything, and Paul, will there'll be a follow-up email, right?
Yeah, there will. And if folks would like, I can email this the recorded version of this session. And also, as I mentioned, if things came up that are specific to your agency that you just want to have a quick chat about, this is a really general kind of financial presentation. But if there are questions that you do have, we can schedule a more pointed training, basically at any time that you're available, and hopefully we can answer your questions that way.
And the same applies for programs. Oh, sorry, there's one more thing I wanted to tell you about program related. We do have a little pot of money for like peer-to-peer exchange. So if you hear about something that's happening that sounds really cool in another county and you want to go see it for yourself, but you don't have the funding for it, let me know and we may be able to help you pay for your travel there. All right, sorry, that's the last thing. Should we call it a webinar?
I think that's it.
All right.
Okay, great. Thanks, everyone.
Thank you. Thank you.